Cantor is a very well-respected name in the traditional finance space, and they have announced they're doing a $2 billion Bitcoin-backed loan program. And Maple, along with FalconX, were two of the first borrowing partners there. So what that means is that we post Bitcoin and then we borrow a larger amount from them. So think like a wholesale amount.
This episode is brought to you by Trezor. Trezor makes beautifully crafted hardware wallets that make it easy for you to safely store your cryptocurrencies. I'm a big believer in self-custody. I've been using hardware wallets for years, and Trezor was the pioneer of hardware wallets, and they started this journey in 2013. Their hardware wallets are open source, and they support a variety of tokens, from Bitcoin to the top altcoins and even new coins such as BlackRock's BUIDL. And I'm personally a user of the Trezor Safe 5. It's a beautiful device and easy to use. And Trezor offers a hand-holding service where they can help you onboard and set up your device so you can speak directly to a Trezor representative who can hold your hand through the process. And if you use the code ThinkingCrypto, all one word, you can get 5% off your purchase of a Trezor device. So to learn more about Trezor and all their great devices and services, visit the link in the description. Welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and joining me today is Sid Powell, who is the CEO and co-founder of Maple Finance. And we're going to discuss the great news this week with Cantor Fitzgerald launching Bitcoin lending and integrating Maple as well. Sid, great to have you.
Thanks for having me on, Tony. Very glad to be here.
Yes, Sid, you and I met years ago at the Proppy conference. As I was mentioning before the recording, I don't know why it took this long for us to set up an interview, but I'm glad we were able to get this on the books.
Yeah, me too. Me too. It's definitely been a while and very, very different state of the world now.
Oh yeah, maybe because with the environment change, the regulatory environment, the Trump administration is more favorable to
Mhm.
crypto. It's actually a better time to have this conversation because we can discuss innovation and not having to worry about, I don't know, the SEC and other agencies attacking us.
Yeah. You can definitely be a little bit more, kind of open and imaginative about the innovation going on in the space. But I will say the SEC's been very welcoming now this year to the industry. They've been hosting a bunch of roundtables, so I think it's a very positive dialogue happening now with them.
Oh, absolutely. It's a complete 180. And in fact, I believe, if I'm not mistaken, I saw yesterday the next roundtable is around DeFi, I believe.
I think so. Yeah. I think this will be the final roundtable in their series. I was at the tokenization
Hmm.
and the asset tokenization one a couple of weeks back. So they're discussing, things like real estate, equities, private credit, that type of thing. But I thought it was really positive, and the staff was very engaged and receptive. And I think Chair Atkins was also, quick to call out the benefits of tokenization, liquidity, transparency. So yeah, I think hugely positive.
Oh, yeah. Lots of progress being made. Sid, let's kick it off with your background. Tell us about yourself, your professional background, and what led to starting Maple.
Yeah, for sure. I like many in the space, I came from a traditional finance background. So I used to be in banking in an area that's called securitization. But what you need to know about that is that it was working with lending companies to help them borrow and access capital markets, and they would act almost like mini banks. They take loans, they take really big loans from banks and investors, and then they parcel those out into smaller home loans, car loans, credit card loans, and so I was doing that in Australia, and then I went to work at another lending company, which was a bit smaller, a bit more of a startup. But that's where I sort of really got interested in crypto and and the idea of smart contracts and DeFi, and that's where I met my co-founder, and we started working on Maple in the background. So always been involved in kind of finance, credit, lending, prior to starting Maple.
That's fascinating because, to your point, your pedigree is in finance, lending, borrowing, and so forth. And then now you're moving that to blockchain, right? And Web3.
Yeah, we're just doing the same thing on chain, and
Yeah.
I think the aha moment for me was definitely when I was working at that lending company, we had to borrow from banks, and I started thinking about whether we could do uh, tokenized bonds using smart contracts. And this was like mid 2018, then wrote a white paper early 2019. But you have to remember that the space was so early back then that DeFi comprised like five companies.
Hmm.
There was Maker, Set Protocol, Dharma, DYDX, Compound, and it was so early that the idea of tokenizing bonds was, you didn't have anything on chain that could be tokenized, and so we kind of had to evolve the idea from there.
Hmm.
And so Maple went through a kind of idea maze of eventually doing direct lending itself. But since then, we've really focused on the institutional segment in the market.
So walk us through the different services that you offer to institutions. How can institutions leverage Maple?
Two ways, primarily. So if you look at what we have today, we do the bulk of our activity is over collateralized lending. And in that instance, we lend to institutions that might include trading firms, centralized exchanges, family offices, or high net worth individuals, and uh, and hedge funds as well. And so they would post Bitcoin or ETH or Sol or XRP, large cap assets, and they post them as collateral and then borrow from us against them. And they use that in either OpEx trading activity for if it's a high net worth or a family office, they might use it for a real estate investment. That was a big one that we've had recently.
Wow.
And and then on the other side of that product is a yield product. And so we would have corporate treasuries, high net worths, hedge funds, asset managers, and increasingly DeFi protocols. Uh, they use us as a yield product. So they might be sitting on stable coins. They want to earn a yield from them. That yield ultimately comes from the loans that we originate. And then the other product that we've offered this year has been a BTC yield product, and that's done in partnership with CoreDAO, which is an L1, uh, and that's a staking product. So we work with them. We stake BTC along with the core governance token, but ultimately the most important part is that for our users, it looks like a yield product where they put in BTC and they get BTC yield back. So that's kind of the most important aspect there. But that's effectively the product suite we offer.
Very interesting. Now, you mentioned earlier some of the folks who borrow against their collateral, they use the money to invest in real estate. I didn't think about that they could take it to any other forms of investment, but I guess
Mhm.
that's an option, right? As long as everything's copacetic with the setup.
Yeah, 100%. And for particularly for a high net worth who might have made their money holding crypto for a long time, they still love the asset, they still love the space. They don't want to give up the upside.
Mm.
And so by borrowing against Bitcoin or ETH or Sol or XRP, they're able to do that. And so keep the upside. They also don't realize taxable gains by not having to sell the asset. So if they had to sell the asset, they're going to have to pay about a third of it out in taxable gains, and then they're not going to have the future upside there. And so one example recently is we've done a loan where it's a high net worth who's using it to purchase a big piece of real estate that they intend to live in and hold as an investment. And so that's a really good outcome for them. We can give them certainty on the cost of financing because we do fixed rate, and they're able to keep the collateral in a qualified custodian. They
Mm.
don't have to put it in a smart contract. The way that we do margin calls is much more user friendly. We'll reach out on Telegram or over email. We let them know. We give them 12 to 24 hours to post margin. It's not like using a DeFi protocol where they might wake up one morning and boom, they've been liquidated without warning.
Wow, that's interesting because I thought, and maybe this was how you guys had it in the past, that it was maybe part of a smart contract setup, but in fact, it's at a qualified custodian, so you have the separation of
Yeah,
funds. Interesting.
It's a hybrid, and that's one of the other reasons that institutions typically, choose to come to us rather than using another fully on-chain DeFi protocol where they have to wrap the assets and put them in a smart contract.
Right.
Is if you're holding BTC, some institutions have accountants who would say that wrapping is a taxable event, so then they have to pay the tax
Ah.
on their BTC gains. Whereas with us, they can use native BTC if they don't want to take the counterparty risk of facing us directly. They can put the BTC in a qualified custody account using a tri-party agreement. So the custodian looks after it. If it drops in value, then we would have the ability to liquidate it.
Hmm.
But it's set up that really suits more conservative institutions. They can use native BTC, unlike smart contracts, and then they can keep it in a custodian instead of having to take the risk of an exploit in the smart contracts. And despite how far the space has come, we still see exploits happening all the time when it comes to
Yeah.
smart contracts.
Oh yeah, I was just about to add that point as a follow-up. The fact that we still see a lot of exploits and things happening, I'm sure it puts their mind at ease that okay, this is not wrapped up in a DeFi protocol. It's kind of pseudo DeFi, but it's with a qualified custodian, so they can sleep at night.
Definitely. Yeah, that's a huge selling point for institutions, particularly for their compliance teams.
Wow, that's really great. So, tell us how the partnership with Cantor Fitzgerald came about, and the big news we heard this week of them launching about $2 billion in Bitcoin lending, and how Maples plays a part in that.
We were tremendously excited about that announcement. So it came out 2 days ago, and uh, Cantor is a very well-respected name in the traditional finance space, and they have announced they're doing a $2 billion Bitcoin-backed loan program. And Maple, along with FalconX, were two of the first borrowing partners there. So what that means is that we post Bitcoin and then we borrow a larger amount from them. So think like a wholesale amount. And then we use that to grow our lending book. So for us, it gives us access to larger amounts of capital. It establishes a partnership with a well-respected TradFi name.
Mhm.
And I think it's a watershed moment where you'll start to see more traditional finance names coming into the space and participating in some way. Cantor obviously has very strong links and ties to the industry through their relationship with Tether, as well as as well as the former CEO Howard Lutnick's relationship with the administration, being very pro crypto. But I think what this means is that you're going to see a lot more institutions look at either fixed income products against Bitcoin or other Bitcoin structured products from here. And also, I expect Cantor to really ramp up that $2 billion program.
So, Sid, just I want to make sure I wrap my head around what this opens up for Maple. So it gives you more liquidity, so
For
maybe.
for us, it's
Uh,
yeah, for us, it's more liquidity and capital to lend out. So
uh,
how it works is we post Bitcoin, we receive dollars, and then we're able to lend those out to our customers. So for us, it's all about growth and securing new financing partners who have the ability to scale. And I think it really uh, is a testament to the confidence that allocators have in the transparency and the liquidity of what we're doing. So all our loans go out on chain. So it's very transparent into how it works. And then the fact that Maple's loans are tokenized and done using stable coins, I think gives them a degree of liquidity that's just not available when you look at traditional private credit.
mm. And these loans that are given out, what's usually the terms on those, given that, Bitcoin's price does fluctuate and on the macro, it's kind of the 4-year cycles.
Yeah, it's a good question. Generally, the vanilla standard loan that we would do is you're looking at 70% LTV. So if you give me $1 million of BTC, I give you $700,000 loan.
Mm.
We normally do it open term with the ability to recall within 30 days. You've got very short dated liquidity and access to the return of capital pretty quickly. And then at this stage, obviously the price of Bitcoin fluctuates, and the interest rates against Bitcoin also fluctuate. I would say roughly you're seeing kind of market pricing in the like 9 to 10% range at the moment for corporate borrowers. And how we manage risk, given your point, Tony, about the fluctuating price of Bitcoin, is we have an initial LTV, so that's that 70% level I mentioned, and then we would have an 80% LTV, is which I reach out. That's the point at which we reach out and ask for either more Bitcoin or for the borrower to start to pay back some of the loan. And then at 85% LTV, that's when we have a stop loss level. So at that point, we're just looking to liquidate the Bitcoin. But in our case, we can liquidate it back to just the initial LTV. So we're not fully liquidating the borrower, and so it's not a terrible experience for them. Whereas often in the DeFi loans, it's a full liquidation, and then there's very heavy penalties on the fees associated with the liquidation. So we try and do a little bit more of a borrower friendly product here, and that's again another reason why institutions will choose us. But I'm I'm very confident that Bitcoin-backed lending is going to be the next way that institutions really participate in the space, because it pays out 3 to 4% more than T-bills. Super short dated, you can get your money back within a month, and then it's over collateralized by an asset that trades over $50 billion a day worldwide, and you can exit a position at 2 a.m. on a Sunday if you want. Very different to to selling houses with real estate backed mortgages.
Oh, absolutely. And, it seems like the puck is heading to a place where Bitcoin becoming this ultimate reserve asset, countries is
Yeah,
setting up Bitcoin strategic reserves. I think just yesterday, Pakistan, they announced they are going to follow the United States and do the same thing.
yeah.
ETFs, you have corporate treasury, right? Michael Saylor's playbook. And
Hmm.
it seems, to your point, what we were talking about earlier, folks don't want to sell this asset, but they want to hold on to it and then borrow against it, use as collateral.
Absolutely. It's holding it as a reserve asset gives you the ability to quickly access cash by using it as collateral. I think you'll see a lot more. You'll see a number of countries, I think, adopt it as a strategic reserve, and it's kind of just the next evolution in sovereign wealth funds in a way. A lot of countries, most famously Norway, some of the Gulf countries, set up sovereign wealth funds to invest and preserve wealth for future generations. And that's how I see Bitcoin strategic reserves for the United States and for other countries following suit. Uh, Also, I think I'm very interested in the trend among some of these corporate treasuries and publicly listed companies in holding Bitcoin. And I think it shows that the market is clamoring for this exposure.
Mm.
And we also see a strategic opportunity for Maple to be a financing partner. One of the things that not a lot of people remember is that Saylor had a facility with Silvergate Bank back in 2022, prior to the banking collapse in early 2023. But what a facility borrowing against your Bitcoin or ETH or Sol allows you to do is opportunistically buy the dips in the market. And so I think Maple would love to work with some of these treasury companies, and indeed we're starting to make outreach to them. But we can be a facility that allows them to opportunistically buy dips, and then anytime they want, they can repay the facility using convertible notes, equity issuance, pref equity issuance, but it just gives them another arrow in their quiver to use.
Mm. And do you believe that eventually, everything pretty much starts with Bitcoin first, and but then we
Yes.
may see folks go to Ethereum and then XRP, because literally over the past 2 days, you had an Ethereum treasury strategy news announced from a public company,
Yeah.
and yesterday an XRP treasury strategy. So it seems like there's a race here.
Yeah. I think Bitcoin, ETH, XRP, and Sol are kind of, they have the highest liquidity in the space. And so they're kind of the preferred starting points for institutions. But I do think that Bitcoin is kind of the gateway drug. When I
Yeah.
talk to people at Galaxy, at Coinbase, some of these more institutional shops, whenever they talk with the pension funds, the endowments, and the insurance companies, your big balance sheet investors in TradFi, the starting point for all of them is Bitcoin. They just want to buy Bitcoin. And so
Mm.
how we've positioned ourselves is we then offer the two next products from there, which are borrow against your Bitcoin or lend against Bitcoin. And the other one being how do you get a yield on your Bitcoin? So the Bitcoin yield strategy we run. But I think that's the natural kind of gateway drug. That's the next thing they think about. But you're absolutely right, Tony. Of course, they're going to look at Ethereum, and you've already seen that in practice with BlackRock and Biddle. You know, it's got over $1 billion of tokenized assets and money market funds on Ethereum, and I think somebody made a point the other day, but I think Ethereum has kind of evolved into the DeFi debt capital market,
Mm.
and in another sense, Solana's become kind of the center for a lot of tokenized equities and equity capital markets.
And how do you feel the staking component to ETH will, uh, when the product eventually gets built around ETH, right? Could that be a very strong
Yeah.
incentive because you're already getting the
Mhm.
natural yield?
I think I think ETFs have been looking at staking ETH for a while, and I think actually there's a couple of ETPs or exchange traded products that are outside of the US that have staking built into them. I think one in the UK and one in Canada. So I think when you have the initial call it spot asset, so whether it's BTC or ETH. That's V1 of the product, and then you get to
Mm.
staking as kind of a V2 because competition drives this, right? You
Yeah.
have to, if you've got five BTC and ETH ETFs, uh, the sixth one is going to have to do something different, and so it's going to have to look at either staking or generating a yield on the asset somehow, and the market's going to have appetite for that.
So I know you're
Yeah.
servicing institutional investors primarily,
Mhm.
but can accredited investors participate and use your
Yeah,
services?
for sure. Yeah. I mean, we have, so if you look, we have kind of three product lines. We've got Maple Insto. That's where accredited investors would go. We've got Syrup USD, which is the more DeFi friendly option, but blocked and not available in the US. And then we've got the BTC yield product. So accredited investors can all use Maple Insto, and that's available in the US. And which it's actually been extremely popular with high net worth accredited investors. They just sign a loan agreement with us, and then they're able to earn an interest rate on their stable coins. And they can choose two strategies. We have the more conservative one, just BTC and ETH back lending, and then we've got the higher yield strategy, which will also do lending against Sol, XRP, and other assets. But both have been immensely popular. The BTC backed one is kind of paying 6 to 7 at the moment, and the high yield one will start paying around 10 at the moment.
I need to look into that, Sid. You and I are going to have to talk after this interview. Um,
For sure.
Now, with regards to security, right? You mentioned using a
Mhm.
third-party custodian and so forth. Tell us a bit more about your security infrastructure and what layers you have in place to prevent someone at Maple from doing something. Because I
Mhm.
know these are questions people are going to have.
Yeah, for sure. It's definitely a good thing to ask, and it's a core part of the operational due diligence that our partners do on us before they start participating. And so internally, the controls we have against call it employee or insider misbehavior policies. So same as you would have in a traditional company when you have who has access to the bank accounts and how much approval, what is required in the way of approvals. We have uh, we have multi-sig wallets in place that all have policies in place. So we like Fireblocks, ForDeFi, and Porto, which is Anchorage's product. But we have people who can approve or initiate transactions internally, and then we have senior people who are required to approve. And so we have that in place for any movements of funds, whether it be funding loans, shifting collateral, and that just helps protect our assets. And then as well, from a cybersecurity perspective, we have a bug bounty program. We have constant monitoring of suspicious transactions using TRM labs. And then we also have monitoring in place around, any attempted exploits or malicious transactions where people are attempting to access our contracts. So yeah, effectively three layers of protection, and as well, I think it's worth noting for most people. So we don't keep honeypots of funds in smart contracts. We When we take in stable coins, we're lending them out to the institutional borrowers. So it's not like they're sitting in a stable, it's not like they're sitting in a smart contract.
Sure.
And then when we take collateral, it's in these custodial accounts as well, which gives the extra layer of protection. So it's very different from the early days when you saw the exploits of things like Fulcrum Protocol and some of the other early lending markets.
That definitely makes sense. Um, I'm curious about how Maple's, or which blockchain is Maple running on? Is it a proprietary
Mhm.
blockchain or is it Ethereum layer 2? And then you have a couple tokens, Syrup and the MPL Maple token. Tell us about
Yeah.
how all of that works.
Yeah, happy to explain how all this fits together. So we're primarily on ETH mainnet at the moment. We are also going cross-chain imminently, actually. So we're working with and and their cross-chain initiative to uh, to have Syrup USDC available, and it'll actually be the first DeFi asset that can be minted in USDC on Solana. So we're really excited about that. We are big believers in the Solana ecosystem. We've been active there since 2022, but we're trying to come back in a big way, and we're doing integrations with some of the DeFi ecosystem there. So Camino, Orca. We want Syrup USDC to be available as both a collateral asset and as a high yield savings account type product there. Um, and then we're one of the big strategic pillars for us this year will be getting Syrup USDC across chain in future. So we want it available on multiple other chains. We're going to be working with Chainlink on that, but we want it available as a high yield savings product there. We actually call it liquid yield dollar. Uh, then to your other point on the governance token, so we actually have closed out support for MPL. We did a 6 month migration period, but now it's just Syrup. So we have one governance token for the entire protocol. Everything is united under the Syrup token, and how that fits in is you can stake it. If you're staking it, you get governance rights, and so you participate in key decisions. And we have a rewards program available for staking. So we do buybacks where we take 20% of the revenues of the protocol. We can update that on a quarterly basis through governance voting, but that currently gets used to buy back the Syrup token, and then that's distributed as rewards for people who are staking and participating in governance. So we're one of the few protocols that has an active fee switch and active buyback program in place because we're one of the few protocols generating sustainable revenues at the moment. So currently the protocol earns around 10 mil annually, and that's growing. And it only spends between 7 to 8. So it's actually now profitable.
That's awesome. And what's on your roadmap? Obviously this you got the big announcement with Cantor, but
Mhm.
anything that we can potentially expect later this year?
Well, I think the big thing to keep an eye out for this year, I'll just go through in order of kind of the products. So Maple Insta, we're going to be doing more of these traditional finance partnerships and really rolling out the idea of fixed income coming from Bitcoin-backed lending to a TradFi audience. So expect more facility partnerships and funding partnerships. Then Syrup USD, Syrup USD, the focus is really going to be on cross-chain expansion and also centralized exchange partnerships. So we've done integrations with the Binance wallet, with OKX, with BitGet. We want to see more of those partnerships. We think a lot of users are on those exchanges. They have great user experiences. They have very large customer bases, and we think it's an interesting product for them to offer in the yield space. And then on the BTC yield product, the most exciting thing we've got coming will be LST BTC. So think about this: it's almost like Steve, but for BTC, it'll be yield bearing, liquid, available in DeFi. You'll be able to purchase it on secondary markets, or you will be able to use it as collateral for borrowing. So we expect a big uptake there.
Oh, that's great. Um, Now I know we're running up on time, so I want to get your take on
Yeah.
your outlook for the crypto market. Obviously, we got legislation being worked on in Congress. Do you
Mhm.
anticipate those getting passed? And what could that do for the crypto industry? Do you see a boom and and things like that?
Yeah, for sure. I think look, it's the legislative space moves around so much day to day that it's hard to give concrete predictions. I think, however, that stablecoin bill gets through the Senate this year. I think market structure bill is kind of the for many of us in the space, that's the bigger that's the bigger ticket item. And that has downstream impacts on all of us. So what is a security? What is not a security? How do you raise money through tokens? What kind of disclosures do you need to provide? There's a lot of meat on the bone in the market structure bill, but I think that'll probably come next year.
Mm.
We've seen drafts of it. I know a lot of people are kind of confident on it, but I just, you never want to bet on Congress being too fast.
Yeah.
Um, and it's always safe for them to kind of take their time. But I think either way, what this legislation means is it gives clarity to institutions coming into the space. It gives clarity to builders like myself who want to create products that ultimately, you know, enhance users' lives, whether by making it cheaper, more transparent. More accessible. This is ultimately what we want to build, and we just want a chance to compete with some of the TradFi institutions who have had regulatory capture for a very long time and competition that was prevented by the posture of the last administration. So I'm actually I'm quietly I have my fingers crossed for a bull market for the rest of the year. I think, naturally I'm kind of an optimist by disposition, but I do think there's a number of catalysts that are kind of helping things. And I think if we get some of these trade deals in place, if we get inflation under control, then you could potentially see a rate cut this year that I think kind of catalyzes more of a bull market for the space. But either way, I think people are returning to the US to build. I meet a lot of founders who are considering exiting Europe or if they had gone offshore earlier, are looking at returning to the US to build. So I think it's very, very strong for the space.
Yeah, that's great to hear. And it's just the air has changed. People are more optimistic about building here. So
Total
that's
180.
yeah, complete 180. All right, I got some wrap up questions here for you. First, if you could create your own metaverse, what would the theme be?
Good question. I kind of toss up between two. I kind of like I'm a fan of the the classical times, so maybe like a Roman Empire themed one. I also like kind of the Age of Discovery as well. I've been reading a lot about Magellan and some of the early explorers of the New World. So I think one of those, so Roman Empire or Age of Discovery.
Awesome. Rapid fire questions, favorite food.
My favorite food is actually it's overnight oats. I kind of make this. I make basically the same thing every day, but it's protein. It's like protein powder, peanut butter, and overnight oats with banana, and it's just like kind of how I start every day.
Favorite musician or band?
I like the '90s alternative stuff. I'm a big fan of the Verve and the Goo Goo Dolls. They usually make it onto my rotations.
You won't believe this. Johnny Resnick lives in the town next to me. I bump into him all the
Oh, no
time,
shit.
and I'm a big fan of Google Dolls.
I love it. Yeah, yeah. Me and my wife are always kind of belting it out on the car rides.
Yeah, for sure. Favorite movie?
Favorite one. I have a couple in my top three, but let's say my favorite one is Whiplash. I was actually just having a conversation about this the other day. And another one I really like is Sicario. But I think Whiplash, just kind of like the grind that the guy goes through, is reflective of what you do as an entrepreneur.
Oh, for sure. Favorite book?
Favorite book at the moment is probably 38 Letters by John D. Rockefeller to his son. So it's literally just a bunch of letters that he wrote to his son, as is outlined in the title. But it gives a hint of his thinking, like how he thinks about competition, strategy, mission, vision. all that. But in my mind, he's the most successful entrepreneur of all time. So I think there's a lot to learn from him. And then the other thing is, I'm generally a fan of Napoleon biographies.
I'll have to check out the book with John D. Rockefeller, the letters you wrote. That sounds fascinating. And when you're not working at Maple, what are you doing for fun?
I used to play a lot of tennis growing up, and since I'm in Miami now, I there's actually a really good padel community. So for those who don't know padel, it's kind of like a hybrid between tennis and squash. But you can you can hit the ball off the back wall. And there's a big community of people in like the crypto and venture space who play. So it's kind of like it's nice exercise, gets you outdoors, and and it's also good for networking as well. I kind of don't have the time or the patience to get good at golf, so Padel's the next best option.
Good stuff, Sid. Really great to have you, and I'm definitely gonna have to have you back on. We got to
Yeah,
do a
I'd love
round
that.
two as you guys, unleash and open up new great things on Maple. But thank you so much for joining me.
No, no, thanks for having me, Tony. Really enjoyed it.